oil, and that gives you a couple of, bearing in mind that US oil is a very, very strong correlation, of course, to US oil, surprisingly enough. But it gives you a couple of levels that you can work with on the US oil fund itself as a strike. Now, obviously, you don't get futures in bar charts. You don't get the option strikes in futures markets. At least I don't think you do. I've never looked, but I'm assuming you don't. But perhaps somebody might know better than I. But if you're looking at US oil, you can do exactly the same. But obviously, we'll come back to Sam's in a second. Let's just get a brand new screen. And as getting a brand new screen, this is the US oil market just here. And you can obviously see, we'll take it up into, say, a 30-minute chart to get some ideas about US oil. If we overlay that against the WTI markets, you'll get a good idea of how the correlation works. And no real surprises there then, is there? There's no real surprises there. But so in other words, key levels on US oil, you can see from a correlation point of view, is almost perfect in terms of the price. Of course it is. Of course it is. So that's something we can obviously think about, and that's something we can work with. So obviously inside of that, we can look at US oil, USO, and we can mark off where the key strikes are, just like every other ETF, every other key level. Now, we don't need to even see bar charts. Now, the good reason why you want to look at bar charts is because you want to see whether it's dollar increments or 50-cent increments, or even 10-cent increments, perhaps on some markets. In the US oil market, it's 50-cent increments. 50-cent increments. Okay. So in terms of 50-cent increments, then when we're looking at this chart here, we can obviously start working our way through some of these 50-cent increment trades. Now, we know where the big ones are going to be. We already know that $75 is going to be a big level because, well, it's $75, isn't it? So we know that the big ones are going to be 75, and we know that 80 is going to be a big level. Well, take a look at 75 and 80 on their own. Is that not amazing? So you can see it sells, sells, and sells off the 75s, gaps above 75s, and drives higher. And then it bought off the 80s here, bought off the 80s, gapped down from the 80s, and drove down into the 75 area. It seems to gap through the big strikes, doesn't it? It seems to gap through those levels. Now, obviously, if we look at the big volumes for open interest, we can see that 77, for example, has a lot of open interest. $77 strike has a lot of open interest at it, so we can mark that area on our screens. And as far as puts, $72 has a massive volume at $72. Massive volume. In fact, the biggest volume is at 72 and 77. On the put side, guys, 72 and 77 are the two biggest option strikes on the oil markets here. And obviously what happened at 77, 72s, buy side pop, right? Buy side pop. So we can see from that information, that's fantastic news. Yeah, fantastic news. But what else can we do? Well, Sam was talking about quick strike. Quick strike, as far as I'm aware, is still free. Sam might be able to confirm that that's the case, but quick strike is CME data itself, and it's free. You can register for it, and of course, all you do is you go do exactly the same thing. You look at the raw data, and you look at the size of the positioning and against that raw data, and you can start coming up with some key levels. But obviously, in terms of US oil, you can just do exactly the same things as well. Exactly the same things. So it's up to you how you trade it, guys. It's up to you how you trade these things. You can obviously work your way through all the various setups. You can look at all the various ideas and simply come up with the idea behind them. The guys are saying that the BarChart does have the futures, which is great news. I've never used it, to be honest. It's only been for illustration purposes because it's a free service. But the guy said that BarCharts do have the futures markets available in there as well, which is great news. So get into those bar charts. Start looking around, so you can take it off US oil and you can take it into WTI, for example, and start looking for the key WTI strikes. And obviously, again, you can just start working your way through the open interest You know where the big strike's going to be, of course. You don't even have to look for it. It's going to be $100, isn't it? Nobody has to bother even looking for that number. You know there's going to be a massive strike at 100. And, you know, and obviously, again, we already know that oil seems to go in strikes of 50-cent increments. So we know that $100, $100.50, $99.50, $98.50, etc. So dollar and 50-cent increments in terms of strikes, major strikes. And obviously you can build a picture around these ideas. And yeah, that's us, ready to rock and roll, right? Ready to rock and roll. So 100 calls, 4,000 open interest, Cuba? 4,000? What was it? Cuba said 42.50. Well, that was the S&P, sorry. Okay. But certainly the 100 calls, 4,100 contracts, 1,700 contracts. So the big level is the $100 level. Massive level. And pretty straightforward for anybody doing any business around this $100 level. You can see it's pinned once, pinned twice, pinned 3 times, pinned 4 times into that $100 strike. And the next strike, of course, $99.50. $99.50. It's going to be a skinny level most of the time, but $99, you're going to be finding the next kind of major key level, of course, going to be dollars. Is going to be the major strike differences. And as you go higher, of course, you're looking at probably the 101s for the dollar difference again. But remember, it does also have 50-cent increments. 50-cent increments, guys. Alrighty. So off and running into today's cash market open. Max hasn't had any trades for the sell-off, nor has Max bought any bottom edges, but, and we like big buts, sentiment very poor at the cash market open. However, with the drop-off in equities, we can see that the big funds still favouring that long bottom edge position. We talked about that this morning, and we added in the idea, of course, the delta giving us a bit of a bullish look at the markets at the moment. So that's quite an interesting evolving story just right there.